Yeah, folks,
Yes.
if you're hearing us chat here, that's all good. You're in the right place. We'll get the actual presentation up here in a second. We do this to test our cameras and our mics and everything and make sure we're all here.
Mm-hmm.
We're all here.
Yeah, sometimes there's sometimes if the mic's not hooking up to the computer or something like that. If someone has an external mic, we try to troubleshoot it before the session.
Test your camera on, your camera off, your mic, your controls.
Mm-hmm. Yep. But yeah, so if you can hear us okay, go ahead and let us know in the chat area. Just tell us where you're tuning in from. And so myself, I'm in Austin. We'll go ahead and start it off. And then Utah.
Beat you. Barely, Nathan. Barely got in there.
Yeah. You know, Val, I saw on a to-do list, you know how you were talking, I forgot the name of the area in Utah that's like kind of your dream vacation spot you mentioned one time.
Oh, Lake Powell. Shh, don't mention that on a webcast, dude. Too many people figure that one out.
Yeah. I saw something the other day about like top 10 things to do. I don't know if it was like before you die or something, one of those posts, but it was like top 10 things to do.
The only way to do it right is you've got to be on a houseboat and you've got to have
Yeah.
good equipment with you, like a good ski boat, some watercraft, other stuff. And you got to go get way up one of the canyons and away from everything. It's incredible.
Yeah.
So,
yeah. I had a brother that lived in Colorado for a long time, and he had a houseboat timeshare.
Yes.
On Lake Powell.
On Lake Powell? Scott, did you get down there with him much?
I got down there twice with him.
Oh, man. It's great. Which marina did he come out of?
Oof.
You remember it was
I
Halls?
have no idea. It was a long
it's either
time
going to be
ago.
Halls, Bullfrog, or Height. Well, not much for Height. Or down at the end of it, it is, shoot, now I'm losing my mind. Though there's really three legitimate places to come out of.
Yeah,
so,
and I don't remember. We came in from Colorado, but I don't know if that helps any.
Well, yeah, most of the time the guys cheating in from Colorado, they'll go down to Halls. Okay. So, but yeah, it's got to bring some water in though. It's way down right now.
Oh yeah,
scary down, really scary down. So
yeah, well, he lost that timeshare in a divorce, so we stopped going.
Tough things happen like that, man. That's too bad. But you know, right now, the last, I believe it was almost the last 6 months of the actual usable year, which kind of goes up through about October, November. Most of the houseboats couldn't launch because the water was too low. So, Wahweap, that's the three. You got Bullfrog, Halls, Wahweap. So those are the three you could come out of.
Yeah, I remember back in, I guess 2012 or so, there was a huge drought over here in Central Texas, and Lake Travis was really low. And I was in diving. I was getting my certificate for diving, and I just remember it was like 100 foot or something. Not 100 foot. I guess that's pretty unreasonably, but it was like a 50-foot like ship we were supposed to go see, like a sunken ship, to get like our certification, and it was only like the top of the ship was poking out of the water, so it was pretty bad. Pretty nuts. But I mean, I guess like Travis, I believe someone told me that Austin's supposed to be naturally dry anyways, but I'm no weatherman, I guess.
Hopefully we'll be getting on right now. As far as water out west, we're doing a lot better this year, and hopefully it continues. But yeah, if you like to ski, right, the ski year looks really good right now. So come out and get on some fresh stuff. Need another storm. Last storm was about a week ago, and so we need some more to come through to keep also the inversion and the air from getting stagnant, laying in the basins.
Yep.
And that's all doing pretty good this year. Pretty happy with that. So hopefully we can recover a bit. Recover. Well, we're generally getting them all in here, Nathan. Let's see here. Doing pretty good with people coming in. Yeah, we got about 3 minutes. We'll launch the whole thing in about 3 minutes, folks. Up till then, you'll have to put up with our chatter here a bit. Yeah. So what you should see on your screen, you should see the slideshow starting screen. It says tax changes 2022 and information. You should see all three of us. Our cameras are up right now, and you should be hearing us chat a little bit. If during the session, by the way, and this happens all the time, if all of a sudden you don't hear anything, your screen's not changing or something's going on, refresh your browser. That's usually what's going on. Just need to refresh the browser, stay in your session, refresh the browser, and you'll be able to kind of continue.
Yep.
Ooh, southern New Mexico. I know a few cities down there. Ruidoso, Las Cruces.
Yeah,
A few of them down there.
You know,
if you ever get a chance, Nathan, that's another incredible one.
I've been snowboarding twice in New Mexico.
Have you? Did you go to Taos?
I have no idea. I was
northern or southern New Mexico?
Northern.
Taos.
Yeah.
Probably up by Taos.
Yeah.
There's a resort down in southern New Mexico, Ruidoso, and it's incredible. Just absolutely gorgeous.
Went to some casino. I was too young at the time. Well, how old was I? I think I was like 19 or so. So I don't know if you can gamble at 19, or I think we weren't allowed in or something because I can't remember, but I don't gamble anyway, so it's not a big deal. But
Kim, I see your question here. Yes, we will. I'm glad you joined us even while you're driving. Look, we will at the end of the session, we're going to be emailing out links to the full recording, the materials, the slides, and any other handouts. So you're just driving, listening to us. Thank you. Yeah, you'll get some great follow-up after the session, and you'll be able to do just fine. Be safe. I understand it's pretty cold and icy out there right now, so keep your eye on the road while we're headed down the road there.
Yep. Yeah, stay safe. That's for sure. And we will send, like Val said, we will send the recording out. It is recording, and we kind of edit it a little bit, just chop out the beginning pieces. But yeah.
Yeah, let me go get my instructions here. I've got a little sheet with some additional instructions here. We're going to be doing some polling questions, folks, during this event, because some people joining this session actually are CPAs that need their continuing professional education credit. So if you don't have to get that, don't worry about those polling questions. What that means is you can participate in those polling questions if you want to, or if you don't want to, you don't have to. Okay. So we're going to be doing some of those during the session. Also, as I mentioned, the session will be recorded. Let me put up a little bit of information here about the CPE requirements. If you are looking for CPE, you will need to answer 3 out of the 4 polling questions. Okay, so I'll put a couple little instructional things up there.
Yeah, let's go. It already is 11 o'clock, so let's go ahead and get the session started.
Very good.
And anybody who's trickling in, they'll be able to see the recording later on, and we'll also send it to anybody who wasn't able to attend. So before we hand it over to Scott, I'll go ahead and do a few introductions for our team and also some housekeeping items. So today's session does cover tax changes for 2022. And this is actually a presentation put together by Avalara and Scott Peterson over there at Avalara. I'll let him introduce himself here in a second. Before that, let's go ahead and go over some housekeeping items. So today's session is done through Showtime. A little overview of Showtime. You can see the questions panel, the polls area, the chat section, and also the handouts. In the questions area, that's what you'll be able to ask Avalara questions and Zoho ourselves questions. We'll be able to answer them throughout the session. And hopefully at the end of the session, we'll be able to have some time so Scott can answer some questions live. Polls, we'll be launching polls throughout this session, and I'll go over the requirements for your CPA here in a little bit. Today's session is sponsored by Zoho Finance Team. We actually represent the CPA partner team over here at Zoho. This session does qualify for 1 CPE credit. Sorry for the 2 right there. I meant to put 1, but fat thumb, I guess. But yeah, so 1 CPE credit. And in order to receive that CPE credit, you must attend for at least 50 minutes, complete 3 out of the 4 polling questions. And a polling question will pop up on your screen like this. So just kind of be on the lookout for that. We'll actually launch a real polling question here in a little bit, but this is just an example of one. And yeah, so it'll just pop up and I can show the results, and you can answer it while the results are being shown. So we'll kind of see it fluctuate as time goes on. And that being said, we also need you to fill out an evaluation at the end of this session, and that will be sent to you. If you need to receive a CPE credit, let us know, and we'll be able to give you that session, the evaluation. Let's go ahead and introduce the Zoho finance team real quick. So we have myself, Nathan Rogerson. I've been over here at Zoho. Actually, my 2-year anniversary is coming up, Val, just in case you didn't know that.
Ooh, I'll need to send you flowers, Nathan.
Yeah, send me flowers. Yeah, so it's actually end of January. But yeah, so I've been here for about 2 years. My previous role was an accounting advisor for about 4 years. I went into corporate accounting, so I'm very familiar with it in the accounting space. But I decided to kind of go business development route and marketing for Zoho because I love the product so much and I believed in it so much. And actually, Val was a big mentor for me to kind of come on over here. And I'll go ahead and introduce Val Steed. He's our resident CPA, and he'll be in and out of the session as well as Scott's presenting. And Val, that you kind of introduce yourself.
Right. Good morning, everyone, and thank you, Nathan. I'm so glad you're still here with us, Nathan. You know, this whole great resignation thing, you're not allowed to do that because I will hunt you down. We're very happy to have our team here today, folks. It's not a big team. We'll be growing, by the way. If you know folks in the Austin area that want to interview with us, Zoho is hiring a lot of folks in sales and technical in our group, in the accounting team and other teams. A lot of companies are hiring, so are we, and we have some wonderful benefits there. So a little pitch for Zoho and hiring there for a minute. Yes, I'm a CPA. I go way back many years in this accounting technology industry. And my responsibility here is to lead the charge on this accountants program, which involves, we do have a website. We do appeal or reach to anybody involved in bookkeeping. So bookkeepers, accountants, professional accountants, enrolled agents, anybody involved in that area certainly needs to come to our website and consider signing up as a partner, because there's a lot of really nice partner benefits that we have through that site. And you can even end up with your own demo Zoho account, which will allow you to sandbox and learn about the product and see if it fits your clients or others, or even if it fits yourself, where you can go on down the road, license to use it later. So
yeah,
welcome.
Yeah. I'll go and launch the first polling question. If you're interested in the finance partner program, please let us know here and we'll reach out to you. We really only send one email just about the partner program, and
Right.
feel free to respond. And like Val said, you'll get a complimentary license, and you'll be able to work with our team as well to kind of help grow your practice. And really, that's our goal over here in the finance program, is to really help accountants grow their practices, accountant finance individuals.
You'll find folks that were really very concerned about privacy. So we don't bug you much. If you're ever on one of our lists, you'll get a little information from us. But we are not one of those companies that will send out like daily emails or call you or bother you, that kind of stuff.
Yep.
We just looking to see, find the people that are interested, and then we kind of move along. So if you're interested, let us know. We'd love to have you come join our group. Did you get your poll done there, Nathan?
Yeah. It's good.
All right. Now, let me introduce our star. Folks, we couldn't have a better guest speaker. If you're familiar with the Wayfair decision, Wayfair involved the company of Wayfair and the state of South Dakota. Okay, South Dakota sued them because they were not collecting sales tax in all these states they were involved in. That was a big Supreme Court decision back in 2018. Scott was heavily involved in that. He was 10 years as the director of the South Dakota Sales Tax Division, 12 years providing research and legal writing for the South Dakota legislature. Here's the biggie, in my opinion. First executive director of the Streamlined Sales Tax Governing Board. Now, many of you on this webcast are going to say, what is that? By the end of this webcast, I want you all to have that one memorized. Streamlined Sales Tax Governing Board. That's something you've got to be aware of. There's some real good opportunities through that board to help you if you're having issues with sales tax. And also, they're going to guide you to help you make sure you end up with a quality solution provider. They actually have certified solution providers called CSPs, and they'll show you their list of CSPs. So there's help out there that's actually a government body, and Scott was involved in that as the first executive director for years. He's been recognized at Accounting Today's top 100 most influential people, 2018, 2019, and 2020. Currently, Scott is the Vice President of U.S. Tax Policy and Government Relations at a company called Avalara, which is actually a partner product with our Zoho Suite solution. So with that, it's my great pleasure to introduce Scott Peterson and say, good morning, Scott. I now turn it over to you.
Thank you very much, Val and Nathan. Appreciate the kind introduction. And actually, I just noticed we need to update that slide because, like Val and Nathan, I too am in the accounting support business. Accounting Today just added me in 2021 to the most influential. So,
oh, there you go.
That is correct.
Yes.
Those announcements just came out. Yeah,
Yeah,
my
it just came out.
prior partner Randy Johnson's on there. You were
Yep,
on there.
yep.
Congratulations, sir.
Yeah, no,
Folks,
thank you.
that's not a small thing in the accounting industry.
Oh well,
actually a pretty big deal.
yes, and I appreciate it, and I get that because I spend so much time helping folks like you, and that's actually I enjoy the heck out of this. My wife would tell you it's because I like to hear the sound of my own voice, but she just retired as a partner at KPMG, so
Oh, nice.
we're both kind of in the support the accountant world.
Yeah, that's great. Great to hear that, Scott. And now you have control over the slides. So
Okay.
what's going to happen now, everybody, Val and myself are going to turn off our cameras and let Scott kind of go through the session. I'll pop in here to do the poll questions. But besides that, we're looking forward to it, Scott.
Thank you very much, Nathan. So thank you all for joining us today. We truly value our partnership with Zoho and look forward to opportunities to have conversations. So this is our agenda today. A little about new tax obligations for increased e-commerce, tax rules for remote workforce, the latest on marketplace facilitator laws, impact of supply chain and labor shortages on tax compliance, increasing digitalization of tax compliance globally. And there was just a news article came out today that I want to talk about, and how tax automation can remove the burden that retailers and the accounting business has with tax compliance. So let's get started. A little bit about the state of e-commerce and state of commerce. You know, these are all numbers you all understand. I mean, you read about these things all the day. I mean, the great thing about the media is they're really good about talking about our economy, and I appreciate some of the stuff I learned. The thing that I want everybody to remember, and you all know this because you are participating in this, is the rapid acceleration of an existing trend toward a shift in sales from in-person to e-commerce. The e-commerce percentage of total sales was increasing at a significantly greater rate than total sales were increasing for the last 15 years. And there was a presumption that growth rate would continue. The pandemic, of course, changed everything. That eliminated all the previous predictions on how e-commerce would grow as a percentage of total commerce, and just overwhelmed the percentage, and it just become our normal way of doing businesses. I mean, we live in a world today where I can sit where I sit, which is in Nashville, Tennessee, and do commerce anywhere on the planet. I just sent 4 bottles of really nice wine to my daughter's boyfriend for his birthday. Sitting here for my desk, send 4 bottles of Oregon wine to someone living in Oregon, and I had to do nothing to get that done other than put my credit card information into a website. 5 years ago, that wouldn't have been an opportunity. 15 years ago, it was, a dream in somebody's in some lunatic's mind. Yeah, at the same time, that the pandemic, just blew the growth rate off e-commerce. We adapted to the pandemic. And so in the first quarter of 2021, sales, and this is kind of an odd comparison, and I wouldn't use this quote much outside of this presentation, but we came back from the pandemic relatively quickly. First quarter, second quarter of 2020 were bad quarters. We had a recession. The first quarter and second quarter of 2021 were considerably different. And I'm going to talk a little bit later in the presentation about how that difference plays out into the tax policy we're going to see in 2022. Sales from Q2 2021 through all channels, 1.3 trillion, highest year-over-year growth ever. Obviously, that's a problem because we're talking 2020 and versus 2021, and that's I'm guessing that 2022 will be even greater than 2021, which will be radically greater than 2020. This morning, I got an email from an organization called the Federation of Tax Administrators, and that's the trade association for state tax commissioners. And every week they send out this newsletter, and once a month, that newsletter will include a estimate of the tax collections from the preceding month. And that was what was in this week's. And in it, they talked about the just remarkable increase in tax collections in December of 2020 or 2021 versus December 2020 in it. But they say, but you can't really compare it to 2020. You got to compare it to 2019. And even in 2019, the difference between 2021 and 2019 was almost 10% increase in tax collections. That's going to be important for 2022. And of course, everybody shifted to midsize. Everybody shifted to e-commerce. I mean, everybody did. The people who wanted to stay in business in 2020 went online, even if they've never been online. And even if what they sell is a little complicated to sell online. You had to, otherwise you didn't have a business. So some of the tax obligations from e-commerce, well, they only have, for the most part, there's just one theme, and that's, as Val said earlier, the 2018 Supreme Court decision in South Dakota versus Wayfair. I mean, that decision just in 1 second completely overturned and upturned the entire world of how tax policy applies to e-commerce. Effective on that day, tax policy applied to e-commerce. Prior to that, it wasn't that much of a deal for a lot of e-commerce folks, because the rule that the Supreme Court set in 1967, which was in effect through June 21st of 2018, was that you had to be physically present inside of a state before that state could make you collect their sales tax. You could do anything you wanted as long as you weren't physically present. And none of the activity that you had outside of a state impacted your obligations inside that state. You could have every person inside of a state as a customer. As long as you weren't physically present in that state, you had no obligation to collect that state sales tax. Well, in the Wayfair decision in 2018, just eliminated that. And I think in a lot of people's minds, certainly I was surprised. I didn't expect it. I expected something different. I expected it. I didn't expect what they did. I think everybody thought, okay, well, if they do something, if they're going to impact the physical presence rule, they'll do it slightly, they'll do it subtly, they'll work in a different test. Well, they didn't work in a test at all. They simply said the decision that they made in 1967 was wrong. The decision was wrongly decided, is what they said. Well, that effectively overturned 50 plus years of law, and in a very radical reading of how that decision could be implemented, one could immediately say, well, all those sales that were made in 1968 are now taxable. Of course, that thankfully all the states had laws that that precluded that. But when you overturn 50 years worth of precedent and you don't put something in its place, you have the potential of leading to just bizarre outcomes. Thankfully, we haven't had truly bizarre outcomes. Well, what we have though today is every state in the country that has a sales tax and one state that doesn't have a sales tax requiring sellers all over the planet to collect the state and local sales taxes based upon the amount of sales that they make. So they've created a new test. The old test was physical presence. Effectively, the new test is called an economic nexus threshold. And an economic nexus threshold is the concept that was expressed in South Dakota's law. That's what the Supreme Court evaluated when they decided that they were going to overturn their 1967 precedent. South Dakota's law was very simple. It's effectively just one sentence. And it says that if you make more than $100,000 in sales or 200 separate transactions in a calendar year, you have to collect their sales tax. And that's all it says. And that's what the Supreme Court had when they chose a case to take to repeal that 1967 precedent. For most of us, the good news is that the South Dakota law actually had a threshold. So we call this the economic nexus threshold. That $100,000 or 200 separate transactions in South Dakota's case is the thing that triggers someone's obligation to collect sales tax. In the old world, what triggered your obligation to collect sales tax was you making a conscious decision to be physically present inside of a state. You open a store. You hire people who live in that state. You deliver things in your own trucks. Those are the three primary ways that you could create physical presence in the old world. If you did one of those things, you knew you were doing it. You intentionally made a decision that should have triggered in the back of your mind, oh, when I do this, I have to start collecting their sales tax. Well, today, that rule that still exists. If you open a store in a state, they expect you to collect sales tax. But now we also have, in addition to that, this concept of economic nexus. And that means that once you get above a certain level of sales, notwithstanding that you have no physical presence whatsoever in that state, that you have to start collecting sales tax. And that's what the threshold, the word threshold means. It means I've stepped over a threshold. Think of it as a door. There's a threshold at the bottom of a door, and you step over that door, and what that threshold says, $100,000 in sales. Or in the case of Texas, $500,000 in sales. Or in the case of Mississippi, $250,000 in sales. And so you walk up to the door of a state and you see you look down and you see a dollar amount written at that point. And you know, once I hit that dollar amount, I'm stepping through that door. Now, what this map does, and this is an important map for people who aren't collecting sales tax everywhere. What this map expresses is the differences in the thresholds. South Dakota, $100,000. All of us that were watching that case said, oh, okay, everybody's going to adopt $100,000. We'll have the same threshold everywhere. This will be simple. Well, as you can see from the map, it's not simple. The blue states are $100,000 or 200 transactions. So if you hit either of those, you've stepped over the threshold. The pink colored states are just the $100,000 threshold, no transactions. So in those states, once you hit the $100,000, you're stepping through the threshold. The two light orange are the two states that have 250,000, and the dark orange are the three states that have 500,000. What this map doesn't express is that there are differences inside the thresholds. Let's take North Dakota and South Dakota, for example. North Dakota is the light pink, so that means they're $100,000 in sales. South Dakota's blue, so that means $100,000 sales or 200 separate transactions. What this map doesn't express is that In South Dakota, that's gross sales. In North Dakota, it's taxable sales. And those two states are radically different, just radically different from each other in their tax policy. South Dakota only has a sales tax. North Dakota has all the taxes. South Dakota taxes everything in their sales tax. They tax accountants. So if you're an accountant doing bit with clients in South Dakota, the Wayfair decision made you a taxpayer in South Dakota. So you now have to care about that threshold in South Dakota. North Dakota doesn't tax accountants. You don't care in North Dakota. That's the difference between gross sales and taxable sales. So you're an accountant who has clients in North Dakota and South Dakota. They both have $100,000 economic nexus threshold. But because they tax different things, it means something completely different on how it impacts you. You will never have to have a license and collect the North Dakota sales tax. You will have to have a license and collect the South Dakota sales tax once you cross their threshold. You can cross the North Dakota threshold forever, and you can radically cross it and not care. Big difference. This is a map that every accountant has to have on their desk. And you need to have you need to have two maps or make this map better. Which is you have to know the difference between taxable sales and gross sales as well. This is a big deal that most people are still learning, frankly. So why is this all important? It's all important because you have to have a way of preparing yourself, preparing your clients. Because once you hit the threshold, that state expects you to start collecting sales tax. A number of these states give you 30 days once you've crossed the threshold before you start collecting. So in many states, you start collecting on the first day of the calendar month. So that's at least 30 days from the day you hit the threshold. So today's January 13th. So let's say you have a client that reaches North Dakota's taxable sales threshold today. Well, North Dakota would say that your client has to start collecting sales tax on the first day of a calendar month. That's at least 30 days from today. So that would be March 1st. South Dakota's rule is entirely different. South Dakota's rule is you have to start collecting the day you hit the threshold. So your clients would start collecting sales tax in North Dakota on March 1st. If they exceeded the threshold today, they would start collecting sales tax in South Dakota today if they hit the threshold today. So this is important. It's just critical that everybody know where they're making sales and they're keeping track of where they're making sales and how many sales they're making, because these laws are now starting to get old, and old in the sense that we are way past that point in time when you want to be caught by a state. These laws, many of these laws went into effect in 2018. And certainly the vast majority were done by 2019. What that means is that so if you cross the threshold in 2020 for a state whose law went into effect in 2018, that state's going to say you owe taxes back to 2020. So this is we're 4.5 years past the effective date of that first state's law, which was Hawaii on July 1st, 2018. And Hawaii is aggressive. So you need to think about your clients' sales in these states and start putting a pencil to the amount of back taxes they're going to owe, the amount of interest that's going to apply to that, and hopefully no penalty, but I wouldn't be at all surprised. This is we're at the stage, and this is the year when states are going to get really aggressive. The pandemic's not over; it's far from over. But the reaction, the slowing down of audits is over. We're going to start seeing a lot of audits this year. And don't forget, if what all you know about sales tax is California, you're going to be shocked when you get to New Mexico or to South Dakota. South Dakota or New Mexico is even different than South Dakota. And both those states tax everything. They tax all property, they tax all services. So if you're doing business in New Mexico, you're a taxpayer if you're an accountant. If you have clients in New Mexico and you're not there, you very likely are a taxpayer in New Mexico, but it's not a sales tax. And their tax return is radically different than every other state's tax return. They don't use the same words. It's like I said, if all you know is California, New Mexico is going to be very confusing. So now that we're 4.5 years past the Wayfair decision, folks are starting to ask the question, well, so I get it. I have to start collecting sales tax if I'm not physically present. I get that. But if I closed a store in a state, I could stop collecting their sales tax. Why doesn't that same concept apply to economic nexus? And I think we're going to find that it does. And we're starting to see states that are making announcements that, if you go a year or you go 2 years below the threshold, even though you're making sales and even though you're collecting the tax, that you can stop collecting. And this is something, you can, where the accounting industry can add a value to their clients. Because you may have clients who, legally can stop collecting in the state. You want to be careful. You want to make sure they haven't created physical presence without telling you. You want to make sure that this is a trend that's going to continue. The worst case is, you wouldn't want to be whipsawing. You wouldn't want people to cancel their license and then, 3 months later have to, get a new license. That if I were in a Department of Revenue, I'd look at that and think, this is something weird here. Maybe I should call that person up and ask them a question. But this is going to be something that is possible, and we need to be paying attention to where our retail friends can stop collecting. All of us who were working remotely before certainly had the opportunity. You need to do a poll, Nathan?
Yeah, I'm going to launch the second poll question. Sorry about that.
No, that's okay. I'm going to look at this question over here.
So what industry are you in? Is the poll question. And this might help later down the road whenever Scott's answering some questions.
While you're looking at that, folks, I know some of you might be sitting there with your head swimming saying, how in the world am I going to figure all this out? Well, there's technology solutions to help you solve that. We're going to come to that later. Obviously, those of you know that Avalara is one of the solutions that helps you solve that. So what we wanted to do first is get you a real knowledge of where the issues are and how absolutely serious this is. It really is. This destination taxation is a huge issue. And sales tax in general has become just a tough thing. Give you an example here in Utah. It just happened this last month. One of my relatives decided to start up their own little taco truck and went and talked to the state tax commission in Utah, talked to quote an expert in the state tax commission in Utah. They sell one thing. It's kind of one product line, one food line, supposedly got the right rate, ran with that for a couple of months, came back, went to file their quarterlies, and it wasn't even close. Still, I feel a little guilty because when I heard the rate, I thought that doesn't sound quite right. It sounded kind of low. And it turns out it wasn't right. So now they're having to try to go back, file an appeal. I'd say, look, we got bad information from the state tax commission. Can we, we're going to pay this, but we just don't want it. We'll pay the higher rate. We just don't want to get nailed, for penalties or interest and everything else, like Scott's mentioning. So this is a very important for you to be on this webcast today. Listen very closely because you don't want to mess with any of these agencies.
Yeah, it's not. I'll let Scott continue. I do have a funny story about my own personal business I did at one point, but I'll let you go, Scott.
Thank you. Appreciate that. So, like I said, we're, everybody's remote these days. I'm remote, but I've always been remote. So, for me, this is no big deal. But for a lot of us, we have a remote employees today that have never been remote. Avalara, I mean, there's 3,300 employees in Avalara. We closed all of our offices, so everybody was remote. And, people packed up and moved to different states, and that when you do that, you as you all know, there are corporate income tax issues, there are withholding tax issues, and there are sales tax issues that come along with being somewhere where you weren't before. And this is an obligation on the business owners and their CPAs to manage. Now, during the pandemic, most of the states issued proclamations exempting remote employees from all the nexus requirements or all the nexus triggers that they would have previously hit. That was good for everybody. All those were done by emergency proclamations issued by the governors. Almost all of those have expired now. So today, if you have remote employees and you didn't care about it because the governor had said, don't worry about it, you should check again, because I'm guessing you need to worry about it. Now, we had a question that I want to talk to you about, and it says, we don't have remote employees, but rather remote contractors. Do these tax rules apply as well? Well, that's a great question. Thank you. Because contractors are like employees in that they create physical presence for you. And so in the big difference between sales tax collection and for someone who has economic nexus and someone who has physical nexus is the timing. If there is no threshold for physical presence. Once you create physical presence, you start collecting on your very first sale. That's different from economic presence. In economic presence, you get to make a number of sales inside of a state before you have to collect their sales tax. That's what the threshold means. In physical presence, there is no threshold. You have employees in a state, you're physically present, you have to collect sales tax. Every state in the country defines contractors to be the equivalent of an employee. And so where you have those contractors, you need to do a little research and check to see whether or not that is a state that maybe accepts contractors from the standard rule of physical presence. I would be surprised if that's the case, though. So thank you very much for that question. Virtual audit. And I don't know if you all have experienced this yet, but I'm hearing this from a lot of my CPA friends, that auditors don't show up anymore. You get a letter in the mail, certified letter in the mail. It says, welcome to hell. We're going to look at your purchase invoices and your sales invoices for the last 3 years, starting the first of last month, 3 years going backwards. They don't show up anymore. If they do, it's because they're local. So if you get audited by your home state, that person's probably going to show up at your office. Or if you happen to live near an office, a remote office, in many states have auditors located outside their state, and they do that because it helps them reduce, the travel costs. Those people might show up. All the rest are turning into what, and virtual audit probably not a. Actually, I may change the slide in the future, because a virtual audit means it's something I'm watching through a headset, and it's not real. Well, these audits are definitely real. All they are is remote, and so the world of auditing is turning into remote auditing. Our decisions as businesses to turn all of our record keeping into electronic records has made auditing very easy and very easy to do remotely. So when you're thinking about being audited, when you get that letter, you should you should assume that it's going to be done remotely, and you're going to have to transfer your records to them electronically. And they may actually demand it. And every state in the country has a law that allows the Department of Revenue to define what it means to keep records. And they may well have come in and amended that regulation or that law to say that keeping records means you do so electronically. And so keep an eye on that. Marketplace facilitators. So one of the things in states for a long time, states have been trying to get, well, I'll be honest, Amazon. When Jeff Bezos created the first marketplace, first electronic marketplace, he didn't create the first marketplace. He created the first electronic marketplace back in the 90s. He created, along with everybody else that created a web store, created an opportunity for folks to compete with in-state retailers without being in state. And so this concept, the Wayfair decision wasn't something that just somebody dreamt up. This is a long, concerted, organized effort by the states to get at remote sellers. Well, marketplaces are very successful, and they were successful very quickly, in so successful that it really frightened a lot of states. There were a lot of states that were very concerned that their sales tax would literally just disappear, because they wouldn't be able to collect any sales tax on remote sellers, and remote sellers were turning into marketplaces, and marketplaces were enormous. And so they've been after the marketplaces for a long time. The Wayfair decision gave them a perfect tool to get that done. So in addition to adopt, in South Dakota didn't do this immediately. South Dakota's law did not apply to marketplaces. South Dakota's law applied to remote sellers. And so it took another law, the next year for South Dakota to get at marketplaces. But what they've done is they've taken the authority granted to them by the Supreme Court in the Wayfair decision and created new laws that are specific to the marketplace. And here on this slide, you see an example of a definition of a marketplace that's relatively commonly used around the United States. A physical, and like I said, Jeff Bezos didn't create the first marketplace. He created the first electronic marketplace. A physical or electronic place, including but not limited to a store, a booth, an internet website, a catalog, or a dedicated sales software application where tangible personal property, digital codes, and digital products or services are offered for sale. That's the definition you'll find in New Mexico, in South Dakota, in Hawaii, where they tax all services. They tax all things delivered electronically. They tax all things accessed remotely, plus all tangible personal property. You might see a different definition in North Dakota. North Dakota doesn't tax things delivered electronically, doesn't tax things remotely accessed, and doesn't tax hardly any services. So you wouldn't really see that much of that definition there. Or Oklahoma, or maybe even Colorado, or frankly, California. But in the states that tax services, this is the definition that you're going to see, or something very, very similar to it. And what they've done by these definitions is simply expand the obligation to collect to the person who doesn't own the property, the marketplace. What's important in this is that those who sell on marketplaces, a marketplace seller, are relieved from the obligation to collect sales tax, and in very likelihood, relieved from the liability that goes along with that, to the extent that they sell their goods and services on a marketplace that's collecting. First of all, who you sell on has to be a marketplace. And it's important to know, it's important to ask them, are you a marketplace who's collecting sales tax, and where are you collecting sales tax? You, as a marketplace seller, needs to know that. Otherwise, their obligation to collect hasn't ended. The other thing that's important to know in here is that these marketplaces have the same economic nexus threshold as remote sellers do. So if it's $100,000 for a remote seller in a state, it's $100,000 for the marketplace in that state. A fair number of states count the sales that a remote seller makes through a marketplace in the remote sellers. So in South Dakota is an example of that. South Dakota includes sales through marketplaces in the remote sellers threshold, in addition to the marketplace's threshold. So if you're a remote seller who sells $105,000 of stuff into South Dakota, $100,000 of that is through a marketplace, well, that automatically creates nexus for the marketplace. You have to count that $100,000 in your sales, which means that $5,000 that you of sales that you make into South Dakota outside that marketplace, you have to collect sales tax on. So the marketplace has $100,000 in sales just from you alone. You have $105,000 in sales in South Dakota. You have a sales tax collection obligation, as does the marketplace. And that's going to trip up a lot of people. A lot of people think they don't have an obligation once they sell in a marketplace, and that just isn't always the case. Here's the map. We've got New Mexico, or no, excuse me, Missouri in a gray. That's because their law doesn't go into effect until January 1 of 2023. Okay, so the big deal on supply chain and labor shortages that have been created by the pandemic are that you've changed. So you're online now, so you're selling things to places you never sold them before. Every time you sell somewhere, you have an obligation to do something different that you've never done before. And B, you may have new suppliers, which means you're buying your products that you're reselling from somebody new. What that means to you is that all those exemption certificates and resale certificates that you had in place, you have to do again. So you've got a long-standing relationship with somebody, and they're not selling to you anymore because they can't sell at all. Their goods are stuck on a barge somewhere in the Atlantic Ocean or the Pacific Ocean. So you have to find a new source for those goods. Well, when you do that, you have to restart all that resale certificate, resale exemption certificate paperwork process all over again. Time for another poll, Nathan?
Yeah.
Okay.
Sorry to change the background again on you, Scott, but having to be a little bit mobile today. So today, this question is a little earlier. How many states have adopted the economic nexus laws? And yes. Great. Sorry to interrupt you, Scott, while you were kind of.
No, that's quite all right. It gives me a chance to look at the questions.
Yeah, it's fortunately, Val is very knowledgeable of sales tax as well.
I know it. I love that.
He goes in those questions.
Well, be sure to review my answer, Scott.
Yeah, I'm looking at it.
Thanks, buddy. Because I put out what I know, but let's make sure we get those right. That's
so on the Rhode Island question,
yeah,
when I think of it, we need to. Does pop-up store mean physically present inside Rhode Island?
I thought it just meant virtual, so I was assuming virtual.
So that's the question.
Now, why don't you answer it for physical though?
Okay, so if by pop-up store you mean that you have opened literally a store inside of Rhode Island, that is physical presence. You're going to collect sales tax on those sales on the very first sale that you make.
Physical nexus. Yep, that would be it.
So the answer to poll question 3 was 45 states, and I believe Scott on that slide, it was like slide 10 or so. There was a few other areas like in Alaska and
yeah, I didn't talk about Alaska. Thanks for bringing up Alaska. So I said in the beginning that 45 states and district. I said 45 states have this law. Well, District of Columbia has this law. Puerto Rico has this law, and Alaska, which doesn't have a state sales tax. I think almost all the cities in Alaska now have the same ordinance, and they've banded together and created an entity that acts like a Department of Revenue, and they expect people to collect sales tax.
Yeah, definitely. And I'll let you kind of finish up the presentation. We'll kind of as many questions as possible.
Very good.
Folks, what's kind of sad is, the United States, we have all these states that make up such a great country, but that also brings in a lot of complexity.
Yes.
Many other countries around the world have a flat rate value-added tax, or just a general sales or service tax, and it's simple. We are, I think, the only country on the earth where every different state, region, and you can get even within a state, for heaven's sakes, that I've seen places where you go 2 or 3 blocks away, rates change. It's so complex. I just can't even begin to tell you how much it makes my head hurt. So anyway, I'll throw in those 2 cents. Let's keep Scott going here.
Yep. Here you go, Scott.
So just a couple of minutes about the rest of the world. And Val's right. We are internally the most complicated country on the planet, except maybe for Brazil. Brazil kind of they have states, and they're very much like us in the way that they allow their subnational governments. That's what states are called. Subnational governments are allowed to do. And they're an interesting place to do business. We have a big office down in Brazil because it's a huge economy and it's very complicated. So a little bit about the rest of the world. The rest of the, as Val said, the rest of the world has a value-added tax or something that looks like a value-added tax. It's if you haven't had the pleasure of doing those, they're extremely different, and they apply to. There's a tax that applies at every spot in the chain of transactions from the moment something is created to the moment it's sold to the final consumer. And at every one of those stages, the miner digs the iron ore out of the ground, sells it to a smelter. Well, the iron ore has to have a license and has to charge value-added tax to the smelter. The smelter turns it into a hunk of steel, sells that to a car manufacturer. That smelter will charge value-added tax on that chunk of steel to the car manufacturer, and in that they will take a credit for the tax that they paid upstream. So the smelter takes a credit on their tax return for the value-added tax they paid to the iron ore, and all the way down through the chain. And these are national taxes. They're not individual, and there are states and provinces inside these governments, inside these countries, but they're not imposed a tax like us. So what's different, obviously, is Brexit. Brexit just turned on its head everything we always knew about taxes in transporting things inside and outside of the UK. It's extremely more complicated today. It's extremely more expensive today. And everything is much slower today in and out of the UK than it used to be. The rest of the EU is working along just fine. They're starting to do things trying to make things a little bit different. The import one-stop shop concept allows businesses to sell in all 27 EU countries with just one monthly VAT return. There are conditions, and you have to apply. I mean, it's not as simple as it sounds. One of the big differences. That's not true. One of the things that make the United States look like the EU is that every country has their own return and their own format and their own way of making a payment, just like they do in the United States for each of the states. One thing that's going on, and that I read about this morning, is e-invoicing. So one of the differences between the states and the rest of the world is the degree to which the rest of the world is moving toward an electronic world. They're much further along than the states are. There's a concept called e-invoicing and e-reporting, and that is an attempt by those governments to be in the transaction at the time of the transaction. They will get to this. Well, they're going to force themselves into transactions, and they're starting to do that. And what it means, this is an attempt by them to eliminate some of the possibilities of fraud that exist in a value-added tax. And so e-invoicing means you have to submit your invoices electronically to the customers. That getting to be a relatively standard thing. When I bought my future son-in-law those bottles of wine in Oregon yesterday, I got an e-invoice. Well, I don't expect that. The winery's never going to send me a piece of paper. It's all done electronically. Well, in the VAT world, they're starting to see where they're making you send that invoice into the government at the same time you send it to your customer. Sometimes you have to send it to the government before you send it to the customer. In Brazil, for example, e-invoicing in Brazil, you have, excuse me, they have to see it before you send it to the customer, and they put in the Brazilian government stamp of approval on it. Pardon me. And we're going to start to see that much more frequently. I'm sorry, I've caught whatever I had, whatever's been going around. And the news out of the EU today is that they're starting a new project to evaluate doing this uniformly inside the EU. So we should start to see this become more of an issue, and eventually this will come to the United States. We're seeing it today in e-reporting. Val talked about the streamlined sales tax. Well, the streamlined sales tax is this 24 state organization that in theory does everything exactly the same way. There are differences, but one of the things that they do the same way is work with people like Avalara to do sales tax compliance for merchants around the world. And one of the conditions is that every year we send to all 24 of those states 100% of the transactions that our customers conducted in those states in the last year. And we do that electronically, and they use that to evaluate, to make sure that the answers that Avalara has given to our customers are accurate. And it's in theory, it works out very well, because we're liable for the audits when something goes wrong, and we get audited all the time and nothing ever goes wrong. And so given the states, that data is no big deal for us, other than the fact that it is an immense amount of data. It takes us weeks to transmit the data to them because it is such a large amount of data. So we'll now talk a little bit about automation. What's critical in sales, and actually what's critical in sales tax compliance, but which is really easy in sales tax compliance, is that it's a yes or no. The overwhelming majority of tax answers in a sales tax are either yes or no, which makes it very simple to automate. Which is why the income tax is so much more complicated to automate, because there are so many of those tax answers that aren't yes or no. There are a percentage based upon what you did last year. Depends how many kids you've got. The whole world of income taxes is so radically more complicated than sales tax that it's hard to automate it. But sales tax isn't. And so what you get by automating sales tax today is accuracy. We live in a real-time world. When you're making a purchase online, you're making a real-time transaction, which means everything has to be accurate that second or that half second. It has to be efficient. Literally has to be done in a half a second, because all of us are, and this is one of the interesting things about the human species. I used to get in my car, drive downtown, get out of the car, walk to the store, and wander around the aisles looking for something. It would take me 45 minutes to an hour to buy one thing. And I didn't mind spending that 45 minutes to an hour. Now, if I spend 5 seconds trying to check out online, I'm annoyed and I quit. So it's got to be efficient. It's got to be just like that. Customer satisfaction. If I'm not in and out of a website in 5 seconds, I'm to somebody else's website, and it's got to be accurate. The risk in sales tax compliance is twofold. One, I got the answer wrong. I charged 6% when it should have been 7%, or I charged 7%. And if I charge 6% when it should have been 7%, I am on the hook as the retailer for that difference. If I charge 7% when it should have been 6%, I'm on the hook to my consumers, my customers, and they can sue me. And I can be on the hook in a number of states for, back taxes for a class that is extremely expensive. Okay, so when you're going to do sales tax compliance, you have to do all these things. You have to know what tax rate to charge, which means you have to know what's taxable and what's exempt. You have to know how to get that information to the government. You have to send them the money. You have to know what documents to keep. Exemption certificate management is painful when you do them by paper. You have to know what licenses it is. We have a lot of customers that are in the alcoholic beverage, in the wine business from California and Oregon and Washington. Well, every one of those people has to have multiple licenses. If you're going to have a winery in California, you have to have a wine license, you have to have a sales tax license, and then you have to have a license with the federal government. Well, you only have to have one federal government license. But every time you move from state to state to state, so if you're going to sell your wine in multiple states, every time you do that, you pick up 2 more licenses in every state that you go to. Imagine that you're selling wine in 45 states. You've got 91 licenses, and they all expire every year. It's remarkable. Fiscal representation is a concept in Europe where the marketplace is fiscally responsible to the government for the sales that occur on that marketplace. There's a responsibility goes with that. And then insights, which is knowledge. None of this is possible without knowledge. So I'm going to stop there, and we're going to go to the questions, Nathan. And you can run your next poll.
Yeah, let me go ahead and take control from you for the questions slide. Yeah, and Val actually, I mean, like I said, he's familiar with it, and he's been there answering them as best as he can. And we are coming to the end of this session. I did want to say thank you to Scott very much to kind of put this presentation together for us for 2022, and also he'll be on the road a lot this year, I would imagine. As
the Ohio Manufacturers Tax Conference in 2 weeks.
Yeah, I'll be there in 2 weeks. It was hard to get them in, and we had to get them in quick in January so that we were able to get Avalara on our docket for the year. As far as questions,
so one thing I'd like to say, because I've seen a question in there about taxable and exempt. And I said, if all you know about sales tax is California, you're going to be shocked when you get to New Mexico. The world didn't get more complex because of the Wayfair decision. All that complexity existed. You just didn't have to live with it. So what Wayfair has done, it hasn't changed the complexity at all. And actually, in a couple of places, it's the Wayfair decision is forced states to become a little less complex, but it's very rare. What the Wayfair decision did was expose you to all the complexity that's always existed there. So you only have to, historically, you only had to deal with Colorado, or you only had to deal with California. Now you have to deal with them and everybody else.
Yeah, definitely, Scott. But yeah, like I said, Scott, we are coming to a close. So I'll launch the last poll question. Really, if you'd like to be contacted by Avalara, they would love to reach out to you and talk to you about some sales tax issues you might be having. Scott definitely has a lot of presentations he puts together through Avalara, so be on the lookout for him. He's very present here in the accounting community, and I love watching him speak. Definitely, we love to have him on the Zoho. I guess I was about to call it the Zoho show, but I don't know.
I like that. You should do that.
Zoho show.
Trademark that.
Kind of our little webcast running series. Zoho. Yeah. There you go.
Yep.
Yeah,
trademark that right now.
Yeah, we'll have Scott on at the end of near the end of the year to kind of help people with sales tax near the end of the year. Because a little funny story about me before we close. I had a small business. I was selling some stuff on Amazon, and I did not take care of sales tax properly. And I had a ton of fine. And I was actually in the accounting industry, and I knew Texas sales tax pretty well. But once I started getting outside of it and all that stuff, it was just a little overwhelming for me. I could have figured it out, but I was being lazy because I had a 40-hour work week, and I was just kind of being lazy about it. So I would have really enjoyed using an application like Avalara where that stress was out of my hands, because
just taken care of. Yep.
It could be overwhelming. And whenever people start sending you letters about payments, and I actually had someone come to my door.
Wow, pretty good enforcement in Texas, huh?
It was just like a $50. It was a $50 late fee or something, and he put that on my door. It was ridiculous, but you don't want to be in my shoes. So definitely take care of it, and that's what we have people like Scott come on to let everybody know not only how complicated it is, but solutions to those complications. So thank you, Scott, for coming on.
You're very welcome. It's my pleasure. Like I said, we value our relationship with Zoho and all its users, and it's my pleasure.
Yeah, thank you. And without further ado, we're going to end the session, and I'll be sending an email out for CPE
for CPEs, and just be on the lookout for that. I really appreciate everybody who was here today and joined.
Thanks, everyone.
And thank you. We'll see you next time.